Yesterday, the euro reacted positively to US statistics as expected. US retail sales nudged up by 0.2% in June, logging a lower rate of growth than anticipated. Economists had forecast sales gaining 0.5%. On the one hand, this is good news. It's obvious that weak retail sales are unlikely to spur inflation and will have a positive effect on price pressures. Overall, this is beneficial for those who buy risky assets, as the Federal Reserve will be forced to loosen monetary policy so as not to harm the economy. On the other hand, a decline in retail sales implies slower economic growth. Nevertheless, markets are still optimistic. The US dollar is expected to remain under pressure, especially following today's data. Besides, traders digested statistics on US industrial production. The June index of production at factories, mines, and utilities decreased by 0.5% for the second straight month, yesterday's data showed. Now let's take a look at today's macroeconomic calendar. All eyes will be on inflation data from the UK and the euro area. Economists forecast that Britain's annual consumer price index in the 12 months to June will drop to 8.2% from May's hotter than expected 8.7%. On a monthly basis, UK consumer prices are expected to rise by 0.4% compared to a 0.7% rise in May. If price pressures ease, the British pound may come under pressure, entering a long-awaited downward correction. Euro area annual inflation is estimated to be 5.5% in June 2023, down from 6.1% a month earlier. However, core inflation across the 20 countries sharing the euro currency is forecast to rise to 5.4%, following 5.3% in May. If core consumer prices are better than expected, an increasing number of ECB policymakers will probably stress the need to pause monetary policy tightening. Thus, if inflation rises in these countries, the euro and the pound sterling will surge. In case inflation eases, the risk assets will gain strong downside momentum as part of a correction. Furthermore, traders may take notice of US building permits and housing starts. The housing market is one of the key investment criteria, so gloomy statistics may adversely affect the greenback. From a technical point of view, the 1-hour Euro-American dollar chart shows that the levels of 1.1206 and 1.1275 act as channel boundaries. The middle of the sideways range lies at the 1.1243 mark. A rise to 1.1243 followed by a false breakout will create a sell signal, thus bringing the euro down to 1.1206. If the price breaks through this mark and tests it from the bottom up, the euro will dive to 1.1164 and probably 1.1130. At the level of 1.1130, I recommend going long on a rebound. Long positions at 1.1206 and 1.1164 can be considered only amid a false breakout. If inflation pressures stay high, the euro breaking above 1.1243, a strong buy signal will be generated. In this case, Europe's single currency will approach 1.1275 and then climb to 1.1310 and even 1.1350. At the level of 1.1350, it would be a wise decision to go short on a rebound, counting on an intraday correction of 25-30 pips. Going short at 1.1275 and 1.1310 will be relevant only in the event of a false breakout. Meanwhile, the British pound has slid as part of a correction. Its further dynamics will depend on inflation data. If consumer prices remain elevated, sterling is likely to return to 1.3046. If the price consolidates above this level, a strong buy signal will drive it higher to 1.3095 and 1.3155. At the level of 1.3155, traders are recommended to go short on a rebound in the hope of an intraday correction of 25-30 pips. Short positions at 1.3046 and 1.3095 can be considered only amid a false breakout. If UK inflation slows, the British currency will dip to 1.2993. If the price breaks below this level and tests it from the bottom up, the volume of short positions will increase, thus dragging sterling down to 1.2947 and probably 1.2905. At the level of 1.2905, it will be possible to go long on a rebound to catch an intraday correction of 35 pips. Long positions at 1.2993 and 1.2947 will be relevant only in case of a false breakout. Best of luck.